Hello and welcome into the KE Report. Shad and Corey here as your host, and today we're getting an update from Sean Brodrick. Sean is the editor of Wealth Megatrends and also contributing analyst to Weiss Ratings Daily. He also writes the publication Resource Trader, where he focuses on some of the commodity stocks that we follow here on this channel. And Sean, always great having you on the show. I guess since we've talked last, the world has been very volatile. Not that it wasn't before that, but boy, just in the last month or so since we've chatted, the markets have been all over the map. Obviously, this is on the back of the tariff policies out of the U.S., the reciprocal tariffs from other countries, the on again, off again policy. We've seen a whipsaw market, and we've really seen very little places to hide. We were talking off mic that the dollar hasn't gotten the bid, neither have bonds. Really, gold's been the only place you could ride out the storm. But if you've been in the markets, it's been a real roller coaster. How are you looking at the macro setup here in light of all of these tariffs, on again, off again policies, and how are you playing the markets right now, Sean?
Well, I'm not being original when I say uncertainty is the big word hanging over this market right now. I mean, people do not know what's going to happen. Now, I know people trading in this market who have convinced themselves either that things are about to head higher and other people who have puts on, I think they're both fooling themselves because things can change on a dime depending on what the guy in the White House, what side of the bed he wakes up on in the morning and who has his ear on a particular day. And so I've kept the portfolios tight. I have been adding some more gold positions because I think it was the action in the bond markets that convinced me that I should be more bullish on gold than I was at the time. I was actually thinking gold would hit kind of a peak and like pull back for a bit. But then when the bond market cracked, that told me that people, and I'll say foreign investors really, are losing faith in the US Treasury, which is not good because US Treasuries are the backbone of a global financial system based on debt, you know? So we have that hanging over the market right now. And it looks to me incredibly bullish for gold. Also, the rotation out of the US dollar, which could be related to bonds, but I think really that's the fact that with new trade barriers, people in other countries realize they don't need as many US dollars as they used to need because they won't be selling us as much stuff. And so, they're just bleeding out of the dollar, probably going over to Japan, which has seen its own rates rising. There's kind of a crisis going on there, too. I mean, we are so US centric, but there's other stuff going on in the world. So it's kind of a whirlwind. So I am being conservative, except for gold. And I mean, I do have other things. I do. But the only things that I'm interested in buying now is really gold names.
Interesting, Sean. I don't blame you. Those names have been the outperformers. But when we take into account this environment of uncertainty in the markets and rates moving higher, that to me means that credit markets are going to remain fairly restricted. And that also means to me that money openly in the markets isn't necessarily going to chase stocks to the extent that it would if we didn't have this uncertainty. Does that then, when you're looking at individual companies, does that change what you analyze? And do you put more weight on companies that have cash in the bank that are generating nice cash flow rather than those that need to go to the financial markets to fund growth?
Oh, I'm avoiding companies that need to go to the financial markets at this point. And I don't necessarily agree that we're going to see tight monetary conditions. I know Chairman Powell wants to do a wait and see thing, but Trump could fire him tomorrow, even though he doesn't have the constitutional authority to do it. He's already done it to another official. And we know Trump wants lower rates, period. Now, the one thing that might allow a Powell to do that is inflation indicators have been coming down. And so, especially with the price of oil down, but there's other things as well, and like PPI and like stuff like that. So maybe if they're nudged by Trump, the Fed will start to cut. I think that's kind of what the market's counting on at this point. We don't know. But if Powell doesn't do what Trump wants, I fully expect Trump to fire Powell. I don't expect him to keep him around. And if you're thinking, well, Trump can't fire Powell, yes, he can. Who's going to stop him? So Now, what would that do to the market if you fired Powell? That is one of the wild cards out there that just makes this market very hard to play right now.
Yeah, Sean, it's such a wild world because it seems like the last year or two, all we talked about was Powell and what the Fed was going to do. Now the Fed is really in the back seat. They're a back burner story compared to what is Trump going to do or what is the administration going to do. Now, a lot of people are still counting on the Fed to do some cuts, some even calling for emergency cuts if the market was to correct any further. This kind of brings into focus the health of the U.S. economy and where we're headed. There's dire calls for depressions, which may be a little bit much at this point, but there's still the recession call out there again because people are seeing the loss of jobs in the government, less. There's supposed to be less spending in the government. Now it looks like there may be more spending. But when you look at something like copper, Dr. Copper, it was at an all-time high, blasting up into the 520s, even up into the 530s briefly intraday. Then it crashed down to $4 just the last week or two, and now it's back up in the mid fours. That's usually an indicator of the health of the economy. How are you looking at it, Sean? Are you expecting a recession? Do you think we come out of this okay? How are you looking at the economy?
With copper, I think we saw lots of buying ahead of the anticipated tariffs. And so that kind of threw things off kilter. And then the crash, I mean, I think the buying stopped because of the tariffs, but now they're not putting tariffs on metals. So who knows what to think about that? Really, we'll have to keep an eye on China. And they have talked about putting more money out into big projects that would, of course, boost copper demand. I am watching copper just to establish some kind of trend because the trend will give me a hint as to what's happening with the health of the global economy. That's why we call copper Dr. Copper. But I do want to bring your attention to what we got out of the New York Fed numbers, which everyone talks, about the New York Fed manufacturing index, how the numbers were better than expected. And that's true, but those are backward looking numbers. If you look at the outlook for new orders from the New York Fed Regional Manufacturers Index, those just hit the lowest level in the history of the survey. That is not good. So there are stresses in this market. We have seen Goldman Sachs put the odds of a recession this year at like 45%. UBS is saying 60%. I would be surprised if we don't have a recession because businesses are seizing up. I know people that import stuff from China as like part of their businesses, and they aren't big guys like Apple that can call Trump and have him lift the tariffs on like what they're importing. Well, like one guy owns a board game company. My wife and I, just as an aside, we run with our friends a board game convention down here in Florida. So I know people that are in the board game industry. All the parts are made in China. And what he was saying is that he luckily got one game shipped over here right before the tariffs. There's one on a boat now, so he expects that he has to pay the tariffs, and that's just going to ruin it because I suppose they could slap new stickers on every game, but those tariffs made the price that they have on those games just unworkable. And also, will customers pay the much higher price? That's something he has to wrestle with as well. And he has a new game that he's in the middle of printing right now. That's the thing. And so you might say, well, he can print it in the US. No, he can't. They do not make the board game parts here in the US. They don't even make the machines that make the board game parts here in the US. It's all moved to Asia. And you can't move things back in a 6-month window or else whatever people are getting, that's just not possible. And it's not just my friend, it's chaos with all these small companies, even middle-sized companies all across America. And so that's why if we don't have a recession, it would surprise me because companies that can't predict the future are not going to be hiring, they're going to keep spending to a bare minimum. And that's just not good for the economy any way you look at it.
Yeah, all your points are spot on. Hiring freezes, freezes on importing goods, everything just seems to be really negative for the US economy. But tying in commodities, again, broadly, something like copper with China, they still allocate a lot of money towards building out infrastructure and that kind of stuff. Is there anything that you've heard out of this administration outside of that executive order that focused on critical minerals that makes you think that maybe the Trump administration will get some sort of infrastructure bill going, something that could further support the commodity sector?
Did he do any infrastructure in his first 4 years?
That's a very good point. No, he did not, but he
No,
also
no,
did
he
cause
did.
the same amount of chaos.
Yeah, well, that's true. Things can be different, but no, I don't expect that. I think that whatever money they get out of this budget is going to new tax cuts, and we'll see how that goes. Now, it is chaos, and it's hard to plan. That's again why I turn toward gold. I can look at uranium, but uranium's beaten down. I mean, maybe it'll bounce from here. It should bounce, I mean, there are good things going for the uranium market, but are future tariffs going to mess that up? I don't know. I don't think the people in the uranium business knows. And then China banned exports to the US of like all these critical minerals. Other miners I would look at are those that are thinking about producing critical minerals in the US, even if it's a few years away, because I think those are going to become extremely popular. I mean, what the heck are we going to do for some of this stuff, rare earths and like that kind of thing? It's a mess. I would like to see more infrastructure in the US, but we know that President Trump didn't like President Biden's infrastructure bill, and he like put a freeze on a lot of the money that was like allocated to that. Most of it was not spent. Very little of it was actually spent. And there were actually problems spending it because of all the red tape. Now, being a Republican, he could cut the red tape. He could get that money out rather quickly. I just don't think it's likely that he will. Would be nice if he does. I don't think that he's going to do anything that Biden thought was a good idea. So, I mean, we'll just have to see. Now, we aren't the only country in the world doing infrastructure. Other countries are, and there's more hope there. And that's one of the things that could really help copper lift off. But I just want to say this to all the people that are rooting for Trump and the U.S. to fail. The U.S. is the lead dog in the sled. If the U.S. starts to drag, it's going to drag down the whole global economy. I mean, there will be safer places to hide, but no place is going to be really safe. And so I hope that the U.S. economy avoids a recession. I do not think it's likely, not at all, but I would like things to work out. Who knows? I mean, things could go well, but right now it looks like they aren't putting a lot of thought into the new policies they come out with. They really do things because it feels good to them more than actually putting real deep thought into it. I mean, we saw China ban new planes from Boeing. Of course they were going to do that if you picked a fight with China. Of course they're going to hit us on all the big stuff we make. Why wasn't that planned out by the White House? We now see the White House is like rolling out aid for farmers because China isn't going to buy any of our grains that it doesn't have to. It's going to buy them all from Brazil, which is good news for Brazil farmers, I guess. But why wasn't the White House thinking about that ahead of time? They just don't seem to be thinking these things through, and I just find that very scary. So again, that brings me back to gold. There you go.
Yeah, some good points, Sean, and it's a very nuanced conversation because the infrastructure, I think both sides of the aisle agree on that. But I think people, when they think of infrastructure, think of roads and bridges, and the U.S. infrastructure is in badly need of that compared to other countries even. We really need an upgrade to our roads and bridges and just basic stuff. But the infrastructure bill was filled with a lot of pork from all kinds of politicians that had nothing to do with infrastructure. And then some of the stuff was really more around the energy transition and kind of the those kind of things in EVs, and some of it was for the AI data centers, which we do need. But it'd be nice
There was
to
lots
see.
of stuff in there for like roads and bridges, though, too. I mean, there was a lot of stuff, I'll admit. Some stuff didn't have to be in there, but they had roads and bridges as well. So will that be revived under Trump? I don't know.
Yeah, it's a big question mark right now, but it seems like that's something that everybody could agree on. As far as China, some people were speculating they were getting back at the U.S. by selling treasuries, and that's why the bonds are selling off. I don't think that's necessarily the case because where would they put their money if that's the case? Maybe into gold, but they are doing those export bans on certain minerals and the critical minerals like the tungstens, antimony, germanium, rare earths, and so that's causing a lot of companies to spike. I'd love to get your thoughts as someone that follows just traditional energy, though, Sean. Oil. Look at the route oil's had. We finally got lower oil prices, not in the way people imagined, but that should help with the inflation picture to some degree. It should help with consumers' cost at the pump. It should help with businesses as they ship things. It's a big input in a lot of things. What do you think about the move down in oil, and how are you playing oil stocks?
Well, yeah, that is very good for consumers. I mean, except the ones that work in the oil fields. But yeah, I mean, that's really good news. That's more money in your pocket every week, because you have lower oil prices, lower gasoline prices, you name it. That's great. But I actually published an article, I think it was last week, could have been the week before, with charts of like where different oil basins will start to shut in as prices go lower. And below 60, you stop seeing new drilling in all sorts of basins, just because they just can't make it below 60 because they have to think long term, and so what if things go down to 50 and like all that. So on the bright side for oil stocks, and I own oil stocks, the cure for low prices is low prices. The longer prices stay low, the more they're going to rebound on the other end. The only oil stocks I own are ones that pay you to own them. And the ones that I have put into various portfolios are ones with really low production costs. So I'm pretty sure that the dividend is safe. So I can play a waiting game with that, but I'm not playing a buying game at this time.
When you're playing dividends in the oil stocks, what sort of dividends are you looking for, Sean? Because there is a wide range that people can get upwards of double-digit percentage. So what do you think is a reasonable dividend to expect even in these lower price environments?
Well, something like 5% is easily attainable with these things. But, I don't think people should be lured in by high dividends. I was just writing a story about hotel stocks, and not in a good way, because as you probably know, international travel to the US is cratering. Funny about when you turn people away at the airport and put them back on a plane so they have to give up the $10,000 vacation they paid for, or even worse, when there's something wrong with their visa, so you put them in jail for a week, people aren't coming to the US. We've seen a drastic drop, depending on what you're looking at, between 10 and 20%. Will it get better? Will it get worse? I don't know. But if you looked at what's happening to the big hotel stocks, some of them are trading at half of book value, and they have dividends in the double-digit percentages. Ordinarily, I would say that's a screaming buy. And yet, until we get things at least starting to improve with foreign visitors, you don't really want to buy those hotel stocks. And so don't be trapped by the high double digits or any double digits right now. I wouldn't. I would just try and get a dividend that beats inflation. I mean, I have some that are like 7, 8%. Those are nice, those feel good. And I have no problem with those positions in my portfolio whatsoever. But let me just put it this way. The higher the dividend, the higher the odds that it's going to get cut. And if it gets cut, God help you. So I'll just leave it at that.
Yeah, that's a good point, Sean, just because you may have a good dividend yield, but if it's at risk of going away because of that, and if the stock is going down in value, you have the risk of the dividend going bye-bye. So a lot of people have turned to things like utilities that pay a good dividend as well. And that brings up just another question for you on the value trade. People in times of uncertainty go into value stocks like the utilities, like consumer staples, household names, or maybe they go into real estate. Any other places you see on the value side of the trade to ride out the storm?
Well, I do like utilities. I mean, select utilities. You have to be careful with that, as like anything else, but I mean, most of the stuff I still have Bitcoin in there. That those people who are really into it say that it's a value at recent prices. And in fact, we're up a little bit. But, I think that could go much higher. I think even though it is not a refuge now, it could be if things get worse with treasuries, and I have European stocks, including European defense stocks. I mean, that's a place where like money's going to be spent. And those look pretty good right now. I have cybersecurity because I think the way things are going, cybersecurity is going to become much more important. It's not behaving that way now. And like some of these cyber stocks are cheap right now. So maybe I'll be proven right eventually on that. Other than that, robots, stuff like that, but it's hard to find values in these things. Most of the values you already know, hey, there are some gold miners that are values after all this. If you actually calculate higher gold prices, the cash flows on some of these stocks just becomes enormous. I'm expecting $4,000 gold by the end of the year. And so I'm like starting to put that into, what are these companies going to be pushing through for cash flow in like Q3 and Q4? It gets really attractive. So you think they're expensive now, and you're right. It's just that as time goes on, they could start to look really good. I hate to always keep speaking about gold. I like silver too. I'll like as a side, but I also have medical stocks. They aren't really doing anything right now, but they can be safe harbors. Though Trump has talked about putting new tariffs on like pharma, so we'll see how that goes too. Uncertainty. This brings me back to the uncertainty. We don't know what's going to happen. It's very hard to buy anything. You don't have to buy anything. You would be amazed how small a portfolio can get, and you can still get a piece of the action when the things you're buying go up. So you don't have to have a lot of positions, trim things down. Now's a good time to do it. If that particular industry you own is going up and the stock you own is not going up, maybe you shouldn't be owning that particular stock unless you have a really good reason to. So, I mean, there's a lot going on. I don't see a lot to buy right now, but I would be glad to be proven wrong on any of this. Oh, also banks. Banks are actually working out for me pretty well. But I'll just leave it at that. That's not natural resources. You guys probably aren't interested in that either.
Sean, that comment on portfolio management, that's where I wanted to go with you last here, is that in these times of uncertainty, it sounds like you really tighten up your portfolio, don't you? You don't go out there trying to buy everything and trying to pick bottoms. You more or less stick with what you think has the best opportunity, maybe what has a trend in its favor, and you tighten up your portfolio.
Yeah, that's pretty much what we've been doing. I have been recommending a few stocks. Like I have one going out for Wealth Megatrends on Friday. It's a gold stock, no surprise, right? But really trimmed back the recos, sold a lot of stuff. Some stuff we took gains, some stuff I knew things were going lower, and thank God I sold them because it would have been so much worse if I hadn't. So yeah, just get your portfolio right size. Only own the things you know are going to work out longer term, and I think you'll be thanking yourself later.
Yeah, and we'll think we'll wrap it up there, but that's such a great advice, Sean, because I think people think they should always be buying or always need to buy every dip. And the reality is there are times where the market goes in both directions. There's times to short markets. There's times to get out of the way of the chaos. And there's also times just to move to cash. It's not a bad position to not do anything and sit on your hands sometimes and just watch to see what develops. So definitely some food for thought for investors listening in as far as looking at through their own portfolios and finding out why do they own what they own? Do they think they should keep owning it? Is it time to batten down the hatches and tighten up the portfolio? Some definitely good thoughts for people as we are entering another volatile period here in the markets. And so, for those that are interested in getting more thoughts from Sean, definitely check out the link below in the show notes. It takes you over to Weiss Ratings, where you can see the different services he provides, Wealth Megatrends and Super Cycle Investor, but also Resource Trader. So definitely click on those links. Check Sean out. Sean, always great having you on the show. And as always, looking forward to our next conversation.
It is always fun, guys. I really enjoy talking to you.